Hello folks, good afternoon. Welcome to this video episode of Techie Investor. Today is the date is September 30th, 2020 and it's a wonderful Wednesday. First of all, I'm really thankful to this market for giving us winner after winner last week and this week. Can't just count them, but had like some terrific winners like D-Dog, Beyond and Plan. In this video, I wanted to quickly share how we executed the BYND Options trade on from September 25th to September 28th. In fact, I wanted to show you how we entered the trade and how we managed the trade and how we exited the trade. Okay. As some of you might know, in TechieInvestor, we use Ichimoku as our primary trading system and also as our scanning mechanism. As you see on the right, we have a scan called one-day conversion. What it does is it looks for all the stocks that have crossed the conversion just on that day. So in that, Beyond came as a pick, and Beyond came as a pick on September 25th. I have to tell you that September 25th is a Friday, and we usually don't place trades on a Friday. But for some reason, we got so bullish about Beyond, and we decided to place the trade. So let's look at how the chart looks. First of all, let's see if this chart is bullish as per the scan that has shown us. I have these automated scans which will automatically scan for all the bullish conditions, and it will also tell me that it is one day above the conversion. So if you look into this chart, yes, it is definitely above the cloud, and the conversion is over the base. And you can see that the Chiku span or the lagging span indicator is above the 26 bars lagging price, right? And that itself shows that according to Ichimoku, it's bullish. But is it enough to enter the trade? Not really. We have to see if the price is the right entry point, right? So for that, what we did is we drew a Fibonacci. If you look at the price, this is the September 25th, guys, which is where the price was at closed at $155, and came from a low of 148. So what we did is we took the previous wave and we took the swing high and we would draw a Fibonacci retracement line from the swing high to the swing low. And we found out that it started the retracement at the 25%. According to Fibonacci and as per our observation, if there's a 25% retracement, there's a very good chance that it can go to 112.5. And in addition to the Fibonacci, we also use another technique called a gann square of 9, where we calculate the angles. Usually in the US market, every move that a stock makes will be in the multiples of 90. If it does not and it retraces, there's a very good possibility of it going back to the multiple of 90. So if you look from the swing low of 140.31 to a high of 162.50, you see if I calculate the gann square of 9, it comes down to around 135 degrees. And the 180 degree will be at 164, and that coincides almost with the 112.5% retracement. And also, if I look at the weekly charts, let me look at the candlestick charts. It had fallen down 1, 2, 3, 4, 5, 6 weeks, and it has been consolidating here 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 weeks. So when I saw this 10 weeks, there was something that was a very high time that the stock has to move. That was my gut feeling when I looked at this. And then when we did this, we entered. So on September 25th, we entered the trade on we wanted to enter the trade, and we saw that the option prices were very expensive. So we decided to go on a debit spread, a call debit spread between 152.5 and 162.5. Remember, we were saying that the price we expect is 165 according to this 120.5. So we decided we'll do it from 112.5 on to 162.5, and we got it for $3.8. So if it finishes above that, then we could get a full $10. That was the intention behind it. But again, we bought the next week calls, which was the October 2nd calls, and we placed the trade. On September 28th, the stock went up to 160 as expected, but it again retraced back for a better entry for the traders. So when it went back to 150, we thought it as a very good opportunity and went and bought up again October 9th, that is the next week, 155 naked calls for around $6. So even if it goes from 155 161, so we thought we'll get at least a 50% $3 move, so $9. So 1 to 164, 155 to 164. If you take the intrinsic value, it comes to $9. So we thought at least a 50% move will be there. So that was the intention behind it. So the next day, after on September 29, there was a news that they had a deal with the Walmart distribution, and the stock rose higher, and it reached out 25% retracement as expected at 165, where we had our sell orders for both our spreads and the calls. So this is little did we know about the news that was coming out. But one thing we knew, that if we do the process right and we play the probability game correctly, then luck also favors us. So that is how we closed the trade, guys. We were able to make about a double on the spread. So we bought it at 3.8 and it went to around 7.5, and we were able to make $15 on the naked call. So we bought it for 6 and we sold it around 15. So totally we were able to close the trade with about 250% on a single day, guys. So this is what I wanted to share with you guys in this video. Wish you guys a very profitable trading day tomorrow, and I'll catch you later in the next video.